Day trading indicators. Which are the best indicator settings on your broker platform? And how exactly do you use them? One of the most commonly asked questions on my day trading channel, besides whether I'm single or not, is what indicator do I use? And which ones are the best that's gonna make you millions of dollars of Lamborghini money? And as somebody who's been day trading for the 6th year now, I've certainly gone through lots of indicators in trading, including from the MACD, RSI, VWAP, Ichimoku clouds, Bollinger Bands, smashing the like button, and the list just goes on and on. I personally do not suggest to rely on indicators in trading, but I get it. If you are a beginner trader, this is where people usually like to get started with finding the perfect entries and exits. I traded with many indicators myself when I was getting started. While I no longer use any more indicators in trading besides VWAP, I still know a few things about all these various indicators. And I found the best way to use these indicators in trading is in pairs, meaning that a lot of indicators are not that useful all on their own, but when you put two together, such as the RSI and the MACD, or the VWAP and the EMAs, they become very powerful. So in this video, we'll be talking about the most popular indicators out there and how to best use them for day trading beginners, as well as what I think are the problems associated with relying on these indicators. Once again, there's no right way or wrong way to using them. It's all up to your personal trading style. So first and foremost, the pair of indicators that most traders love to use right now is the MACD and the RSI. MACD stands for Moving Average Convergence Divergence. It's a trend indicator, meaning that this indicator tells you when there is a reversal of trend coming along, whether the stock is starting to break out to the upside or selling off to the downside. And how do you set up this MACD indicator? By default, this is what the settings look like in Thinkorswim, and you can do the same in any of your broker platforms. Again, you want to use the default settings of 12, 26, and 9, because the whole point of using these trading indicators is that you see what the crowd is seeing, right? MACD is a trend indicator. You want to see where the buying or selling money flow changes. So basically, when the two lines, the blue line being the fast line and the white line being the slow line, start to cross one another, that means the trend is starting to change. You can see on this chart, when the blue line crosses over the white line and the histogram starts to turn red to green, the stock SPCE started trending up higher and higher. And when the blue line crosses beneath the white line and the histogram starts to turn green to red, that's when the stock is starting to sell off. But wait, remember I said that this MACD indicator works best when it's paired up with RSI. RSI, this indicator is a momentum indicator that tells you when a stock is overbought or oversold. A stock is considered overbought when the RSI crosses above 70 and approaching 90. This means that there's potentially too much buying volume to the upside, and we could potentially be near the top. And vice versa, a stock is considered oversold when the RSI indicator drops beneath 30, meaning that there's too much emotional selling to the downside, and the stock could potentially be at the bottom and we could bounce really soon. Again, same for the RSI indicator settings, you want to use the default. The whole purpose of using the RSI indicator is to try to pick the top and the bottom of the stock, which is kind of similar to MACD, the trend indicator, and that's why they work pretty well together. Just by itself, standalone, the MACD is pretty much a lagging indicator, because it takes a while for the fast line and the slow line to converge, which is fine for swing trading, but for day trading, where every single second counts and the precision and entry is crucial, it's not exactly ideal. RSI, on the other hand, I find it to be pretty early just by itself. As you can see from this example, the RSI indicator crosses above 70 and starts turning red at this point, but the stock keeps on going higher for the next 10 minutes or so. And it's the same thing the other way around to the downside. So that's why it's a good idea to combine MACD with the RSI. So when you see the MACD lines crossing already, but the RSI is not hitting 70 yet, it's probably still fine to look for an entry long. And when you see your RSI is starting to turn red, don't worry. Check your MACD and see if the two lines are far away from crossing. And if that's the case, don't worry about it and stay in the trade longer until the MACD confirms. The oversold RSI is just there to remind you that there could be a trend change coming soon. Same thing if you're trying to look for a bounce entry on the long side. You can see the RSI is indicating an oversold condition. That means you can start looking for an entry soon. But the MACD hasn't confirmed the crossing to the upside. So you can wait for both of these indicators to align before taking an entry long. So as you can see, by using this RSI and MACD indicator pair, it allows you to see the potential trend changes coming soon. But it still requires you to be patient and wait for your entry, instead of guessing where the top or the bottom is and just jump right in. I personally found this indicator pair works better when you're trading less volatile mid-cap and large-cap stocks. Not so much when you're trading low-float penny stocks though. Is this MACD and RSI gonna give you a 100% win rate in day trading? Absolutely not. Nothing is 100% guaranteed in day trading. The better indicator pair to use for low-float penny stocks is the VWAP and the 9EMA. VWAP stands for Volume Weighted Average Price. It indicates relative strength or weakness of a stock. So if a stock is trading above VWAP, that means the stock is overall bullish on the day, and there's more buying volume in the stock. And vice versa, if a stock is breaking beneath VWAP, that means the sellers have control of the stock, and the stock is relatively weak. This is just the most general way people use VWAP. It indicates whether the stock is bullish or bearish short term. And if you see a stock trading just around VWAP, maybe holding above it for a little bit but breaking down for a few seconds and coming back up and then reject it again, that generally means the stock is choppy and the direction is undecided. Or that could mean that they are trapping around VWAP on the long side and the short side. And you hear me say that a lot in my recap videos. Because VWAP is an extremely general strength indicator, how every trader uses it in trading is gonna be slightly different. And how hard and how far away the stock pulls away from the VWAP could mean a potential extension. We'll talk more about VWAP trap and extension later on. So you can add VWAP here in Thinkorswim study settings. Again, just use the default settings. I never try to change any of the numbers up here. You can change the colors if you want in the VWAP tab. Very important though, make sure to turn off upper band and lower band. You just want to use the default VWAP. At the moment, I'm just using VWAP all on its own, but I found that in the past, using VWAP combined with a 9EMA works really well when you're trading low-float penny stocks. EMA stands for Exponential Moving Average, which tracks the price change of the stock over a period of time. A very common question many beginner traders have is what's the difference between EMA and SMA, Simple Moving Average? Compared to SMAs, the EMAs put more weight on the current price fluctuations, so it updates a lot faster to recurrent changes, and it's more ideal for intraday trading. On the other hand, the SMAs update a lot slower because it calculates all the price changes over the set period of time equally. So in my opinion, it's better to use it for swing trading. What this 9EMA and VWAP pair does really well is that they indicate to you a potential start of a strong breakout. Again, you can set up this 9EMA by going to Studies in Thinkorswim and look for Moving Average Exponential and just put in 9 in the length. Some other common ones the traders love to use are the 13 EMA and the 15 EMA. And honestly, you can't tell much difference. Again, this is just my own opinion as a trader who no longer use most of these indicators out there. I'm sure there are people who swear by it. So using this VWAP and 9EMA is very simple. Since VWAP shows you the relative strength that we talked about earlier, and night EMA shows you the trend. So if you put the two together, it will show you the strongest change that's about to happen, which is a breakout. So in this instance, you can see that when the white EMA crosses over VWAP to the upside, that's where the stock squeezes very strongly to the upside. And when the EMA crosses beneath VWAP, that's when the stock is very weak and starts to sell off. The further the white EMA pulls away from VWAP, the stronger the stock is to the upside. So that tells you to not fight the trend. Just buy the dips if the stock is strong, or short the pops if it's weak. Now that you've seen the two indicator pairs that I recommend using for beginner traders, you must be wondering, why did I stop using them in the first place? And my answer to that is, using indicators, in my opinion, is a distraction from observing the real life price action of the stock. All these indicators, of course, they look picture perfect after the fact, just like memorizing patterns, right? If you're staring at indicators all the time, you're not observing the little nuances in the price action regarding who is trapped in pain and where the momentum could potentially be going. When trading in the moment in real time, how hard the stock rejects resistance and how hard it bounces off a support, that's price action. That's the only indicator that's not gonna lag. And it gives you the best anticipation and confirmation when you're picking your entries and exits. Don't get me wrong though, using the indicator pairs that I've talked about earlier is a good way for beginner traders to start seeing the trend changes and where the stock could potentially be extended to the upside or downside. You have to start somewhere, right? But I would recommend, once you start getting a hang of it in a couple of months, to start looking at the candlesticks just by itself without relying on indicators. I think that'll give you a better read of a stock and speed up your learning process. Like I said, the only indicator I use nowadays is VWAP and volume. So if you want to see a dedicated video on how I use these indicators and how to use them to identify long traps and short traps, let me know in the comment section below. And also, what's your favorite indicator? I'm always interested in hearing what other traders are using, so let me know below as well. Thank you guys for watching as always. I'm the Humble Trader, and I'll see you guys next week.